Hello again, everyone. This is Joe Hentges with Beyond the Chart. And in this technical analysis of the stock market video, I'm going to take a look at the market action like I usually do and then check in on three key financial stocks. So stay tuned. All right, we're going to start off here with the SPX weekly. SPX was down 25 points for the week. A little bit of an inside down candle in here. We did not break last week's high, did not break last week's low, or when I say last week, I mean the week ending the 1st of April, which was the week ago. So right now we continue to have lower low, and this wave count continues to hold as long as we don't take out this wave 2 high in here. And we haven't done that at this point. The next one to take a look at is the New York Composite. And this is a broader index, much broader than the S&P 500. And you can see how much more negative of a picture that this is painting. It is in a very solid downtrend. And right now it was down 100 points for the week. It did break last week's low in terms of the trading at one point during the week. So now watching to see if we start to get a little further action and start to roll over a little bit more. That's what I'm expecting anyway. Russell 2000, also a very broad index, and it is painting a negative picture just like the New York Composite is. And it was down 20 for the week. It had gotten just fractionally higher than the previous week, did not take out the low. So we still have a whole series of lower highs here on the Russell 2000. So it really hasn't started to turn yet, at least on a weekly chart. The next one we're going to take a look at is the semiconductors. So look at the semiconductors on a weekly basis. And again, this is a little bit of an inside candle, inside down candle. And not penetrating the lows. So the jury's out a little bit in terms of a turn. We need to have lows start to break and need to start to get a close below the 10-week exponential moving average. But semiconductors was down just 0.80 on the week. So didn't move a whole lot. Home builders just down slightly. You can see it was down and then came back during the week. Down 0.19, kind of a pause. I'm not sure where. Let's see, the high here, or the close, is at 34.09. The open, 34.08. So fractionally inside here in terms of the body. I don't know if you'd call this a harami or not. It could be close. If it was a little further down in terms of that dark body in there, it would look a lot more like a classic harami. But anyway, this could be a little bit of a pause, kind of a doji type candle in here. Could be a little pause at the top before it rolls over. Now the next one, financials, is definitely starting to roll over. Now this is a little more negative picture, and you can see how the financials XLF has closed below its 10-week moving average, and it's closed below the trading of the last 3 weeks. Not only did it break it on an intra-week basis, but actually closing, I'm pretty sure it was 22.10. Yes, closing below the range of the last 3 weeks. So this looks like it's rolling over. And we're going to look at three financial stocks here in a second. And you're going to see that they're all starting to roll over. So this picture, and I've talked about this huge tail on this candle right here. I really think that this was formed in the first couple of minutes of that Monday. I'm not sure how valid this low really is in here. I mean, it's very illiquid in a lot of these ETFs on that Monday. That was for sure. So I mean, from when looking at the bodies of the candles, it looks like a solid 1, 2, 3, 4, and now this is starting to roll over. Let's take a look at, I'm going to start off with American Express. We'll do it in alphabetical order. So American Express, as you can see, it has broken this trend line, this pullback rally, this counter trend rally that everything's been in since February 11th. It's broken this trend line now. We got a moving average cross just happened on with Friday's trading. This is the first time that the 10-day exponential has crossed below the 21 day, and that's a simple. I use a 21 simple in here. So the 10's crossing below the 21 for the first time since October, okay, right in here. So it's the first time that that's happened. This looks like it's starting to roll over. Let's take a quick look at the weekly chart of American Express. You can see here for the week it was down $1.60, which was 2.6% for the week. So closing below the 10, and you can see on this whole thing how it's pulled down. If we zoom back out of this, the picture on American Express here, it's come down quite a bit. It gathered a little bit of support right in here at this dotted line, where I kind of expected some support to come in. It wasn't clean, like it didn't perfectly stop there, but in terms of closing for the week, it looked like, you know, that did kind of get some support in this area, right around where these lows were back back here in 2012. So that's the picture on American Express. It's come down a lot. It looks like we had a little bit of a top up here, not even a little bit, a good sized top. Not as big as Bank of America, which we're going to show you next. Let's take a look at that. Here's the daily chart on Bank of America. You can see how this is rounded. It's broken that trend line. You can see other little smaller trend lines in here that have been broken, but clearly there's a rounding going on. The moving average is crossed again, and this is the first time that's happened since early December on Bank of America. Pretty negative picture on B of A, and if we come down and look at the weekly chart of B of A, you'll see how weak this. I mean, look at this big top up here, and then the long-term trend line that it is broken, pulled back up to, and now it looks like it is rolling over and coming back down. It looks actually acting on a weekly basis like some of these global indices I looked at. Germany and Japan and some of these others got this very similar type picture. All right, we're going to take a look at Goldman Sachs next, and that's the last one for today. Let's pull up the, here we go, the daily on Goldman Sachs. Goldman Sachs, not as much of a rounding effort because Goldman Sachs looks like it's been chopping sideways, but, you know, it has broken this trend line now. Let me zoom in a little bit, and you can see the moving average has just started to cross again, just like all of these, a lot of these, you know, happening on Friday, getting just the start of it on Friday. So it kind of looks like it wants to roll over. When we look at it, by the way, Bank of America was down 5% for the week. And Goldman Sachs on a weekly basis, look at this, down 6% for the week, down 9.54. Big bearish golfing bar. Let me see if it, the high 160.01, it opened. Now, it wasn't engulfing, but it almost looks like it. I mean, it's basically covering almost all the trading of the previous week and then some, and closing below the prior week low. So pretty negative. And then you can see that it's broken the long-term trend line in here also on the stock. Coming from that 2008 low, the financial crisis. So that's the bigger picture on Goldman Sachs, and the fact that this kind of activity is now starting. Looks like it wants to continue the downtrend. All right, that's the picture on these three financial stocks and the market for this weekend. Hope you found that helpful. If you're watching this anywhere else besides my website, head on over to the website and check out the posts over there, and check out the membership program. Would love to have you. Anyway, this is it for the weekend. Have a great weekend. I'm going to go watch the Masters.